go ahead and jump in. Can everyone see, and feel free to just throw a yes in the chat. You don't have to all unmute, or one of you can unmute, but can everyone see the main page of the PowerPoint right now? I just want to make sure I'm sharing the right screen. It should say Property Taxes 101. Okay, good. All right, well, let's jump in and get going. We're going to first do a little disclaimer. My name's Carlin Ellis, and I'm broker, one of the owners of Realty One Group Prosper. I'm not an attorney, and I'm not a professional property tax consultant. So the reason I disclose that is because what I'm sharing in the next few slides is based on my history, my experience. I've been in real estate for over 20 years. I've protested my taxes almost literally every single year. I've hired professionals to protest my commercial properties. And I've gone before the ARB and didn't do so well, but I have experience going before the Appraisal Review Board and fighting them. We got into a pretty big standoff, and that's a different story for a different day. So I do have a lot of experience. I've helped clients over the years. So that's where I'm coming from with this. I'm also, I have some resources that I can direct you to. I actually want to put a couple of them in the chat for you. Let me do that while we're still getting a couple more people in here. Well, never mind. That's not going to be as I wanted it to be. That's okay. I will make sure we share those resources. There's a lot of great Texas A&M. They have a real estate center. They put together an 84-page booklet on property taxes. And then there's a 24-page booklet on exemptions. So if you're curious about more specific details on property exemptions, I would definitely reference that book, but I'll make sure we share those links and get them out there to you guys. I'm gonna go ahead and mute everybody. Let's see here. But feel free to unmute if you guys have a question. You can unmute or you can throw it in chat. I'll keep an eye out on chat. So the second half of tonight's class will be a Q&A with Blair, and Blair has a cohort that's going to be joining her, and they are professional property tax consultants with Texas Tax Protest. So she's going to join us probably between 7:15, 7:30, and we'll spend the last 30 minutes or so doing a Q&A with her. I'm going to go over the first half, or really basics about property taxes, and answering your questions. I'll go into the protesting process a little bit, and then we'll go deeper in with Blair and the professionals. Okay, sound good? Let's get going. So tonight's agenda, which I just basically said, is we're going to talk about what are property taxes, how are they calculated, how to understand your taxes with a mortgage account, an escrow account with your mortgage bank. That can get really tricky, especially in our area. We sell a lot of new construction. And so new construction and escrow accounts, it's like this trifecta of problems and stress for homeowners. So I want to make sure we go over that. We'll talk about the different exemptions, but again, I'm not going to go into too many details on the exemptions. And then we'll talk about the protesting process and open it up to Q&A. Again, keep in mind, unmute yourself and ask questions along the way. This is really not interactive, and I'm still letting some people in, so forgive me. Okay, so what are property taxes? Basically, Texas doesn't have a state income tax, and Texas doesn't have a state property tax. What we have are local entities, taxing units that tax us, county, city, MUDs, road districts, fire emergency services, and that's how they get their source of income. So because we don't have a state income tax, these entities have to have money to put in the roads, to support the police and fire and all of that. So our property taxes are paying for all of that. We have a lot of people who move from other states where the property tax rate's much, much lower, such as California, but their property tax rate may be 1.5%, but they have a state income tax to help offset the difference. So we got to pay for it somehow, some way. And as Texas owners of residential real estate, or any real estate in Texas, we get to pay for it through our property taxes, which are good and bad, right? Depending on your point of view. We've seen over the last 2 years, our values go through the roof. And so unfortunately, our taxes have gone through the roof, and it's been a little terrifying for a lot of people. Hopefully this year will be the first year we rates, not the tax rate, but the tax bills, the amount that your home's being assessed at, that valuation. We hope we will see those come down. We don't know yet what they're going to come in at, but I'll be really shocked if they don't come down a little bit, and then we'll fight them. So we'll talk about it. Okay. So how do we calculate property taxes? And again, remember, I'm going really basic right now. So if you know this part, just hang in there with me. But it's a 3-step process. First, we have the appraisal district in every county. There's a county, a chief appraiser. His job is to work with his appraisal district, his staff, to assess a valuation, a market valuation for your home as of January 1st. So what they're doing literally right now is determining what your home was worth on January 1st. A side note to that is if you're looking at buying new construction this year, perhaps you don't own a home yet and you're wanting to understand this process before you buy, and you look at new construction, the way they're going to assess value of that structure is what was the phase of the home on January 1st. So if you don't buy a home until October and the home isn't done until October, maybe the home was only a slab on January 1st, or maybe it was just the ground or a frame stage. They will take a percentage of the construction based on where it was on January 1st. I'm building a house right now. I know this process. So I ran out to my home on January 1st and I took pictures of the stage it was in so that I could prove to the county the stage. Because what happens is the appraisal district's office, they all can't be on every new construction home on January 1st to view that stage. So they will go out between January 1st and the end of March and do a best guesstimate of what it was on January 1st. And my home now looks much further along. Sheetrock has tile going in, cabinets going in, and I didn't want them to try to assess me at that valuation, that percentage of completion. I wanted to make sure they knew I was at frame stage. So I took pictures, I'm ready to go. So when you're buying new construction, just something to keep in mind. We'll talk more about new construction in a little bit. So January 1st, the appraisal district says your home, your market valuation is $400,000, for instance. The taxing units are these entities that I mentioned a minute ago. The Emergency Services District, ECC is a big one out in Hays County and Travis County. Your city tax, your county tax, school districts is a huge chunk. All those taxing units come together to determine a final tax rate for that property. 2 properties in the same city can have very, very different rates. So keep that in mind. It's not like, oh, I want to buy in Buda because I've heard Buda is really low. Well, I can have one subdivision at Buda that's a 3.17 tax rate and another subdivision in Buda that's at 2.1. So the city, city taxes are part of it, but there's a lot of other taxing units that can affect a property. So something to think about. But all those taxing units add up to a total tax percentage. And then the tax assessor collector, the county tax assessor, is the one who sends out the bill based on the appraisal district's value and the taxing unit's total percentage. Those 2 times multiplied together gives you your total tax bill for the year. So that's how they calculate it. And I have an example in a minute. I'll show you here. Here's an example of the different taxing units. So again, like I said, Buda, you may think, oh, Buda, is a low rate. Well, it could be a low rate, but again, if you're in a neighborhood that added a MUD, if that's a utility district that needed to go in to put all the infrastructure in there, we're seeing MUDs on the east side of 35. There's one now in Kyle on the west side of 35. They've had to put in infrastructure, and they're going to charge a tax to those homeowners for a period of time, usually about 30 years, to repay the cost of that infrastructure. And so in those subdivisions, those property tax rates can be over 3% or close to 3%. So again, it varies subdivision by subdivision, home by home, sometimes home by home. All right. So this is the timeline of the actual process. And what I'm going to do is go around the wheel on the outside first, and then we'll talk about the middle. So January 1st, like we said, the appraisal district's going to go out and value the property as of that date. They're going to assess a number, and then by about April 1st, they have to notify us of that valuation. So all of us should be paying attention to our mail around April 1st and look for the letter that comes in the mail that says your property has been valued at X for the year. The big unknown this year is we don't know if that value will come down. For the last 2-3 years, we've seen it go up, crazy up. We want it to come down. We hope it will come down. I believe it will come down, but how much is a very big unknown. And then once we get that valuation, we want to file a protest, a notice of protest of that valuation. I believe, and everybody has a different theory, but I believe you should pretty much always file a protest no matter what. Don't care what's going on in the market, we want to file a protest. I can show you 2 homes side by side that over the course of 15 years, one filed and protested every single year and one never paid attention to it. And the amount of property taxes those 2 homes pay, the difference between those 2 is just unbelievable. And some people think, well, it affects the value of my home as far as selling it on the resale market, and that is not true at all. What a buyer is willing to pay for the home has nothing to do with what the county is assessing that home's value at. So it's a benefit to a buyer to have those taxes lower, not higher. So something to think about. So April, May, we're filing our protest. May through July is when the ARB, which is the review board, the appraisal review board, is going to be hearing these protests. So we say, I'm a homeowner, I disagree with your valuation. We'll talk about what happens. And if we end up going before the board, they're going to hear all those cases through the summer, essentially, and sometimes even into the fall. Because last year they ran really late. We didn't even get our bills till much later than normal. At the same time that that's happening, the taxing units, you know, the fire services, emergency services, the road districts, the city, the county, all of those guys, the school districts, ECC, they all have to set their tax rate, what they're going to charge for the year. If they're going to go up in the rate, some of them have rules they have to follow. So some of them, they can only go up a tiny little percent without getting a vote by the majority and getting approval by the majority. School districts, you'll see a lot about the bonds coming out. Hayes has a new bond up for election coming up pretty soon. We just did one last year. You know, there's so much growth going on that it's happening a lot right now. Those are examples of, hey, voters, we need the money to put in the infrastructure, to put in the schools. Please vote to approve. It's going to cost you, and you hear the ads, you know, it's going to cost you $100 for your house, you know, for the taxes to pay for this. But that's what those are doing, is those local taxing entities are saying we need to raise the rate that we're charging homeowners to get, so that we have the money. And what we've said as homeowners is we don't want to raise the rates because our values are going through the roof. You're making more money that way. You shouldn't need more money, but that's neither here nor there. Okay, so May, July, we're doing the appraisal review board. We're going before the board and fighting our valuations. At the same time, the taxing units are locking in what they're going to charge us. And then October 1st, the tax collector for the county takes the total units per, you know, what that percentage makes up, at 3.17% or 2.46 or whatever it is. And they take the appraised value from the appraisal district, and they're the ones that put the 2 numbers together and issue the bill. And then the bill comes out October 1st. It is due by January 1st, and you won't have a late fee until after January 1st. January, February starts the late fees, and penalties kick in after that. So that's what's going on down the middle of the circle. The sphere here is talking about when the bills are due. Any questions on timeline? Any questions at all? Okay. Let's jump into the next one. So this is an example that I did of 123 Main Street, Anywhere, Texas. The appraisal district sent out a notice on April 1st. The value of the property they determined was $400,000 for this particular property. The total tax unit came up to 2.47%. There are no exemptions in place on this particular home. And so all we're doing is straight line math of 400,000 times 2.476% gives you a total bill that will be due October 1st of $9,904. And that seems simple and makes sense. Okay, we get that. The question really is to the homeowner, is your home truly worth $400,000? And that's where the protest piece comes into play. And it, without any exemptions in place, the bills can get out of hand really fast. So we'll talk about exemptions and everything in a second. Let's jump into, though, for a few minutes, we're going to talk about how mortgage escrow accounts work and new construction. We're going to go back to new construction. So when we have a new loan, the lender is going to do their best job of predicting what the annual tax requirement is going to be for those property taxes for the year. Right now, this time of year, they're looking at the home's tax bill for last year. That's the only thing they have to go off of right now, because they don't know, the new values for this year haven't come out. They don't have a tax rate set by the taxing units yet. And so all they can do is say, well, based on last year, this is what we think it is. They will create, if you are doing less than 20% down on your home, they will automatically require an escrow account. With more than 20% down, you can choose to have an escrow account or you can choose to waive it. It's totally up to you. And they're going to collect a cushion, usually 2 to 3 months of cushion of those property taxes and homeowners insurance into that escrow account. The problem becomes at the end of the year, because the mortgage company did their best guesstimate, it could be off. And over the last 2 to 3 years, we saw it being off greatly. You know, they were using 2021 is a great example. They were using 2020's valuations for the 2021 taxes to collect all those new accounts, all those homes that those people paid for, but the values were going up so fast that by the time the actual bill came out and the valuations came out at the end of the year, they were off by, you know, $20,000, $30,000, sometimes $100,000. It just was, it caused a lot of hardship for people. And so depending on the time of year when you purchase your home, the title company is the one who's responsible for making sure they get the collection of those taxes, the credits from the seller, and the escrow account set up as accurate as possible. But you're not going to be accurate until October, until that bill comes out. So if you're buying a home anytime in the first 3 quarters, just know they're going to do the best they can. But where we really get into problems is in new construction. So we're not even going to new construction. We'll talk about new construction in a minute. We're going to talk about what happens when we're short. So this is an example of last year we paid in, let's say our lender needed, I use that 9904 tax bill amount that we determined on that $400,000 home on Anywhere Street. They've been paying in basically $695 every month for January of 2022, or for the year of 2022. They paid in a total of $8,328. However, the estimate came in higher for their homeowners insurance and the taxes at the end of the year. They were short on this account. They paid the county, you know, the county sends your bank the bill for the taxes and your insurance sends the bill to your bank for the insurance, and the bank has no choice but to pay those 2 bills. Whether the money's there or not, they have to pay the bills. And so they wrote out more than what they collected by $2,600. That's what that blue is, the shortage at the end of the year. And so what happens is your bank will then do an analysis in January, sometimes in February, and they'll look back over the last year and they'll send you a statement that says we've reviewed what happened with your account and we've determined there was a shortage. And the problem is that we're going to be short again for this year. So not only do we need to collect to make up for the shortage for 2022, but now we know we need almost $11,000 for 2023. So you're making up the difference on both of those, which then results in your property tax monthly escrow payment for taxes and insurance going from $694 to $1,127 a month. Does that make sense? I don't want to come off the slide until we all make sure we understand that one. Any questions on that? And feel free, if you guys don't want to unmute and ask, you can chat. Everybody's way too quiet. And we're going to go through this way too fast. That's okay.
Okay. Hey, Carlin, I have a quick question for you.
Sure.
Going back to the timeline, and kind of what we see here is you were saying that they come due basically January 1st, but if it's in an escrow, then we'll see it hit on the February payment, correct?
No, it's a good question. So the bills are supposed to go out October 1st. if we go back to this timeline here, the bills are going to get issued October 1st, and you have until the end of January to actually pay them. You're not going to have a late fee till February. So your escrow account, the bank, should pay it sometime between October 1st and December 31st so that you can have the tax write-off in that year. You cannot claim a property tax write-off on your taxes except for the year the taxes were actually paid. So in the course of my 20 years, I've seen one bank, and I swear it was an accident, but they accidentally paid everybody's escrow property tax payments out of their escrow accounts in January instead of December. And they had people, I mean, furious, absolutely irate. I've never seen it happen again. It did happen once. So they usually 99% of the time will always pay them October, November, December. This past quarter, fourth quarter, the bills weren't even out October 1st. Like some of them didn't come out till October 15th and almost the end of October for Travis County, I think it was. Like they were really, really late this year. And so you can go online and look for it. They'll mail it. They'll usually, if the county knows that you have a lien, the escrow account is in place, then they're going to send the bill to the lien holder. But if you just bought the home this year, they may not have the bank on record yet. And so they may send the bill to you at home, and you're just going to email it to your bank and say, here it is, pay the bill. Or if you bought the home, they may still have the old owner of record, and they may send the bill to the old owner. So in December, what I would do as a homeowner is I would get on the county's website and see, are my taxes paid? If they're not paid, I would go get the bill online and email it or fax it or however your bank wants it. There's going to be a way for you to submit the bill to them and say, here's my bill, please pay my taxes, and make sure they pay the taxes by the end of the year. That's a really good question. Any other questions on that? So January, February, we're going to do a recalculation of what's going on with the taxes. And what I recommend you do is if you think they're going to be off, like you'll know based on taxes, the insurance, homeowners insurance has gone through the roof over the last year. So that's another way we can have a shortage. You can always, pretty quickly calculate what is my shortage going to be and start setting aside some extra money to help make up that shortage. So instead of at the end of the year, your payment going up by, what is that, $430, you can say, no, I have the $2,600, let me give you that money, and then only adjust my payment a little bit to cover the difference going forward. So you can always get the money. You can't give them extra like right now. So like in 2022, when you knew this was going to go up and there was going to be a shortage, you can't say, hey, you're going to be short at the end of the year, bank, let me give you extra money for my escrow account. They can't do that. They are not allowed to keep extra money in the account. They can only charge you based on the facts at hand, which means the bills they have. And so if you know they're going to be short, just set aside money and then be ready to write them a check at the end of the year to fix that shortfall. Okay, so new construction. This is where, again, like I mentioned at the beginning, we have a lot of problems with new construction since, I mean, almost 2/3 of our buyer home sales in our area are new construction. Where the issue comes into place is January 1st, maybe it was just the land. And now we're buying the home towards the end of the year. The home's miraculously done within the year, which doesn't happen anymore, but it used to. And the tax valuation, the property taxes that the lender's using could be based on land. They shouldn't be doing that anymore. They used to do that back in 8, 9, and 10. They got a lot of trouble for doing it because they really created problems, but they're still going to be short. They usually are not accurate as far as their estimate for the tax valuation. They don't know a true valuation yet. They don't know what the county's going to value it at. So you're going to want to talk to your lender and figure out, have them maybe help you pull what the county valued homes like yours in the neighborhood that sold maybe last year and see what those valuations are at and try and best estimate what you think your tax burden is going to be. And again, set money aside, have it ready to go. The problem becomes we're going to do a best guesstimate that first year. It's going to have a shortage at the end of the year. So year two, we're going to adjust accordingly and have a shortage through year two. But we're truly not, if they didn't have 100% valuation of your home, we're not going to know the true valuation of the home and that true tax bill till the end of year two. And then that means by year three, we have a super shortage. So if we're not paying attention to that, it can get ugly really, really fast. And so that's always my fear, is just to make sure homeowners, when they're buying new construction, they really understand that. The other thing to keep in mind on any time you buy a home is you want to make sure you're getting enough of a credit from the seller for your closing to cover their share of the property taxes. But again, if value, like right now, values aren't out yet. We don't know what the county is going to value the home at. So if you're about to close on a new construction home, the builder may not be giving you a big enough credit for their portion of the property taxes. But everyone's going to sign something at closing that says we're going to make it right at the end of the year. But making it right is on the burden of the buyer to get that bill, look at it, and figure out, wow, D.R. Horton owes me $1,000 because I didn't get enough of a credit from them at closing for their portion of the property taxes. The way it works at closing is the seller is going to pay, they owe property taxes through the day of closing, and then the buyer begins their responsibility starting the next day. So a buyer will receive a credit from the seller on their closing disclosure that reduces the money that the buyer has to bring to the table at closing. That credit is put basically into the escrow account to help pay the property taxes. So again, at the end of the year, if you bought your home during the year, pull out your closing disclosure at the end of the year and look and see how much did the seller give you as a credit, and see if we're off and if we need to go get that back. The title company and your agent should help work with you to do that, but it's the responsibility of the seller to pay that check and get it to the buyer. All right. Any other questions on new construction?
I have a quick one. This is
Sure.
Lindsay.
Yeah.
Okay, so, I've seen this happening right now. The shortages from 2021 are hitting.
Yes.
So let's say at the end of I'm just curious if you've seen this at the end of 2021, say there was a shortage from the tax bill and my client did not get a big enough credit. Is it too late for them to go back, do you think, to the builder to ask for more of a credit from them?
I would certainly go back and ask for the credit. There's no timeline stipulation usually. So the form that's signed that says they're going to make it right is a tax closing disclosure that the title company creates and makes everybody sign.
Correct.
And there's no timeline or deadline to do that in. So I would absolutely go back and say, hey, by the way, here's an invoice for the shortage that you owe me, $1,000.
Okay. Perfect.
Yep. Good question.
Thank you.
All right. So I'm going to switch gears in a second and we're going to talk about exemptions for a few minutes. Any other questions on what we've covered so far? You guys are doing really good. We are going to be early before our tax people come join us, but that's okay. All right, let's jump into.
Can I ask one more question?
Of course. Of course.
Okay, so I going back to the, if you're putting the 20% down on your property, like on your upfront, and so that brings it down under the 80, so then there's not an escrow. But what if during the life of the loan you bring it down to 20% at that point, or under the 20% of the mortgage? Does that change it on an escrow for the next year?
No. So you could always request the lender to no longer escrow your taxes. But I'm going to mute you. I keep hearing myself. Okay. You can request, after you have that equity in there, you can go back to the bank and say, hey, I've got enough equity. I no longer want to escrow my taxes. And they may or may not allow that to happen. Another note I would love to bring up that I just realized I should have mentioned is if you ever, let's say you're not escrowing your taxes and you're struggling financially and can't afford to pay your property tax bill, immediately let your lender know. They will pay the bill and then create an escrow account to help you make those payments to get it caught up. They would much rather they pay those property taxes than have the county upset and want to foreclose on the home. So they're going to protect their position, their first position as a lien holder, and pay the property taxes on your behalf. And then they'll turn around and create an escrow account, start charging you a monthly increase. But that's something to keep in mind. I have never seen or had anyone that I know of go to their bank and say, hey, stop doing the escrow account. But I know it can happen. Certain loans, it may not be allowed to happen, but for the most part, they should be able to. I know, you absolutely at your 80% equity on conventional loans, you can get rid of your PMI. So it's kind of the same sort of thing. So, for a savvy investor who wants to control their money, excuse me, they may rather keep that money and make money on it in other ways and then pay the bill at the end of the year, which is totally fine. I don't blame them. Good question. All right. There we go. All right. So let's talk about exemptions. So we have several different tax exemptions in the state of Texas. Your primary residence is the most important one, in my opinion. It's going to protect you. So if you qualify, I definitely implore you to get that put in place if it's not in place already. You'll hear, oh, I have to be in the home January 1st to file it. That is no longer the case. We can file a primary residence homestead any time of the year. The minute you move in, file the exemption. There's also an inherited, oh my gosh, I can't talk anymore. An inherited residence homestead, over 65, disabled person, disabled vets, spouses of disabled vets, surviving spouses of first responders killed in the line of duty, and then ag exemptions. I'm not going to go into all the different types and benefits and what they do. I'm going to talk a little bit about exemptions and just make sure you understand kind of the overall guidelines on them. But once we're done with my portion and we're waiting for the tax consultants to jump on, I will go throw the chat into chat, the link on exemptions and all the different requirements. Ag exemptions are the biggest ones, the most difficult ones to navigate. And so I could spend a whole hour just doing exemptions on the class, but I don't want to go down a rabbit hole right now. The thing to keep in mind is that you've got to apply for the exemption. Once you're granted that exemption, you do not have to reapply every year. Like, it'll stay on the property. The only time a primary residence exemption would change is if you decide to put the home in your name today and you apply for your homestead exemption, but then a year from now, your financial advisor says, oh, put the home in a trust. The minute you change it to a trust, then you're going to lose that exemption and have to go back and fix that. So that's something to keep in mind. The general deadline is May 1st, but again, you can apply for homestead exemption at any point in time. I would just, like, the minute you qualify for the homestead exemption, you click on the home, go ahead and apply. You want that to kick in as soon as possible. If you've been in a home, if you're on this call right now or watching this as a recording, you've been in your home for a year or two and you never filed a homestead exemption, I would go do it immediately and then reach out to the county and let them know that you took, ownership of the home 2 years ago. It's been your primary homestead. They will send you the back taxes that they've collected that they shouldn't have collected. You'll get a refund from them. So that's really important to know.
Hey, Carlin.
Give back up to 3 years. Yes.
I'm sorry to interrupt you.
No, you're good.
Is there a specific time frame that you can go and have it backdate for? Like, is 2 years the max?
I think it's 3 years.
Okay, good to know.
Yep. So yeah, if you have any clients or anyone that that hasn't had that in place, the biggest problem we saw over the last 2 years with people who didn't have it in place is that the exemption allows or creates a cap at which the county can, so the county is going to appraise our homes, right? And last year, my home went up almost $200,000. But with the homestead exemption in place, they can only tax me on a 10% increase. It caps them at taxing us at a max of a 10% increase a year. Like they may again value it for 200,000 more, but they're only charging me, that $50,000 increase. So that's the number one most important reason why we want an exemption. We also want an exemption because it will take 15,000 off that taxed value. It will reduce 15,000 off that valuation for your school taxes. And other taxing units have other discounts for the exemption. So there's lots of good reasons to make sure those exemptions are in place. There is no cost to file the exemption. So if you ever get anything, so Laura's saying with Williamson and Hayes, they're only going back 2 years. Okay. So I'm trying to remember, I just helped someone who I thought got back 3, but I cannot remember for life of me what county they were in. Maybe it was Travis. I don't know. But yeah, each county is different. There's no rules. So if you have a client who is going to, file an exemption, but they've been in them for 2 years and qualified 2 years ago, just have them get with the county right away, file that exemption and get with them and talk to them and have them work through it and see what they can get back. I mean, to me, anything's better than losing that over that lifetime. It's terrible. So again, the exemptions are going to reduce the amount of money you owe to them, but then it gives us protections on as the values go up. There's also another reason why we want a primary homestead exemption in place. In the state of Texas, there are certain rules to whether creditors can come after and lien your home. If there's like an accident and God forbid somebody, sues you and they have a claim against you, we have some protections in place with the homesteads as well. When it's not a homestead, then it becomes free game. So I own a commercial property, one of our offices, and that is not protected, unfortunately. So any other questions on exemptions? Again, I could spend a whole class on exemptions. I don't want to go too far down. Yes.
I'm sorry, I might have
No,
missed
you're
it,
good.
but if we've been in our home for a year, and we're gonna apply for the homestead exemption, you still get a refund if you've been there a year?
So what's changed is that in I'm trying to think what year this is, 2023. So in 2021, the rule used to be that you had to be in your home on January 1st to qualify for that exemption. That went away. That requirement went away last year or the year before. And so I would go ahead and apply right now and let the county know that you should have had this exemption in place last year, and see how that can financially help you. They'll work through that with you and help you. Yes. So immediately, like tomorrow, go online, apply, send it in. When you apply, you have to usually send in a copy of, right now they're wanting vehicle registrations that show the address, but there's ways to work around that. So just make sure you go ahead and apply, reach out to the county, let them know, and then they'll help work through. And they're not quick about it, but they'll work with you to get that refund.
Got it. Thank you.
Yeah, absolutely. All right. Let's see, a couple more notes. Yeah, file today. We've been talking about it. It's basically, one of the things that helped homeowners over the last 2 years is why values were going through the roof. Having that homestead exemption cap of 10% maximum valuation increase really saved a lot of people. And again, this year, we're hoping that will change. Things will come back down, but we're going to have to see how that plays out. All right. So I'm going to go through the protest process for a few minutes. Again, I'm not going to go deep. We've got professionals joining us in a moment who are going to share, do a Q&A with us, who will go a little deeper into the process. But again, as I mentioned earlier, April 1st, we're all going to receive a notice in the mail. If you do not see it in the mail, you can go online to the appraisal district's office that says what they determined the valuation of your home to be as of January 1st. You have 30 days from the date of that mailing to file the notice of your decision to protest that valuation. So unless they come way down, I would suggest you go ahead and file a protest the minute you get that letter. And where we see people get into trouble is they get the valuation in March, April sometime. A lot of people don't even pay attention to their mail these days and don't even realize they have it for 30 days. They miss that deadline. And unfortunately, a lot of times when I find out about the problem, it's when you've gotten the bill in October and you're going, this is wrong, the value's too high, I need to fight the value. By then it's way too late, unfortunately. So it's really important over the next 60 days, we pay attention to when we get the notice and that we only have the 30 days to turn around and file the protest. So we're going to file our notice to protest, and you can do it online with most of the counties, or you can fill out a form when you get it in the mail. There'll be an application to protest, usually with the statement, and you're going to turn around and mail it in. I personally do both. I mail it and email it. I'm a little crazy about that. And then once that's been delivered to them, you're going to email them and request the evidence that they use to determine your valuation. You want to see their case for how they came up with that value. And that's the big unknown for this year is we don't know what those are going to look like. But again, we're hoping they're going to come down. When they give you their evidence, it's going to include the comps they used, other homes in your neighborhood like yours, maybe, hopefully, and it will rate the condition of your home and the condition of those other homes. And so we want to look at all of that, maybe have your favorite realtor help you analyze that and look at it. And then from there, you can decide, do I think I have a case? Because we've already filed a notice of protest, right? And we've requested the evidence. But then we want to determine, that's how we determine, okay, what's our best fight? How are we going to get this? And when we do a notice of protest, it's going to say, and it's optional, what do you think your home is really worth? You can give them an amount, you can give them an amount then, or you can wait. If you give them an amount, I can't talk, they may come back and counter that amount or agree to that amount. They want evidence. So if you have evidence, you can submit it at the time you do that protest notice. And they may review that notice and be like, oh yeah, we'll change it, and they fix it and it's done. And that's easy, that's great. But sometimes, a lot of times, they say no, and you are then scheduled to go before the ARB. The ARB is the next step. So I may be skipping this up. Well, reviewing the evidence. I'm not reading my slide. Then we're going to go before the ARB. Before we go talk about the ARB, we're going to talk about the flaws in the valuation. So the first way that there could be a flaw is in, like, maybe the comparable properties they use. Like maybe they pick properties and are comparing your property to properties with views and you don't have a view. Or they're newer homes and yours is 10 years older. You know, there may be a very easy explanation as to why the comps you used are not like my home. And that's easy to use. We're trying to disprove their case. That's slam dunk. Slam dunk. Don't ever quote me on that one. But that is a very easy case to demonstrate. It may also be a material fact of the property. So let's say in the ice storm, Snowmageddon a couple of years ago, a lot of homes were severely damaged. Those homeowners could send in proof that their home was damaged, that, I can't even live in it because it's so bad. Or I had a client once whose foundation totally failed. And so she sent in documentation, the engineer's report showing the failed slab and all of that. The county will review that and go, you're right, your home isn't worth $400,000. And they took her valuation down by half. So the minute you can document proof as to why factually what they think your house is like and really what it is, that will help bring the valuation down. You want to make sure you support it with photos, invoices, anything you can use, insurance claims, anything you can use to prove why the reality of your home and the factual statements of your home are not like what they thought it was and what they were trying to value it at. Same thing with the size of the home. A lot of homeowners may say, oh, the county thinks it's really bigger than it is. I have an appraisal from when I bought it, and it's really 300 square feet smaller. That's your decision whether you want to fight them on that square footage. Personally, I would fight them and get it down because I don't want to pay taxes on square footage I don't have. It doesn't make sense to me, but that's your decision. So again, we're talking about, are we using the wrong comps? Or maybe the comps values are wrong in error. Is it a valuation thing? Or is it a factual condition of the home or of the property that we need to adjust? So those are the two reasons that we're going to work with the county. I don't want to say fight. We're going to work with the county to try and get the adjustments made. We're going to submit the evidence. And again, they're going to approve it and agree to it, or they may counter you, and they may throw a counter. So the last time I went before them, they said my home was worth X. I said, no, it's worth Y. I sent in evidence. And one of the times they came back and said, well, we think, your number isn't right, but we're willing to meet you in the middle and give you this number. And I said, great, let's take that number. And I was fine with it. But one time they weren't willing to budge. And so my options were only go before the board, the ARB, or I had to take their number. And so then I said, nope, I'll go before the ARB. And so when I went into the ARB, I had to present my case. And again, I used their evidence, and I had to explain what they want to know is why is their evidence, their case, not valid. And I will go down the rabbit hole as to what happened with mine, but I brought evidence in for all the people on the board to review. I had my own packet of information and presented it all. And then we were at this giant standoff for about 20 minutes. It was not fun. I did get off a little bit on the valuation, but not a whole lot. Let's see. Okay, so the ARB, the county appraiser, will publish a notice around May 1st. If you are going to go before them, I recommend you pull this. This is a list of the procedures and how it works. You're going to need to submit your evidence that you're going to be presenting to the ARB via electronic copy. So you're going to email them a copy of the evidence, but then you're also going to bring enough copies so that everyone on the board gets a copy and you have your own copy. I've had clients show up and they had 5 copies for the board and none for them, and then they were stuck talking without being able to see what they were talking about. So make sure you bring enough copies for everybody. You're going to go into a room and sit before the board. The board is made up of volunteers from our community that are educated and trained. They do not work for the appraisal district. They are not employees of the appraisal district. They are there, let me rephrase. They get paid to do this job, but they are not staff of the district there to do this. Like they are, community people that are coming in to do this. They're supposed to be impartial, not biased, and they're supposed to sit there and listen to your case, and then they make a determination. And they'll talk themselves, they'll ask you questions, and then hopefully there's some kind of settlement agreed upon. If you don't agree to their findings, so with mine, my last one, we were at a standoff. They absolutely didn't agree with me. I absolutely didn't agree with them, but I wouldn't leave. And so finally, this nice lady on the board threw out a number just to get me to go away. And so she gave me something, not very much, and I ended up taking it and leaving. But if I didn't agree to that number, I could then take it further, and there's a whole appeal process, which could end in a lawsuit. I've had a client do that. But I'm not going to go down that hole or go into all of that. So that's kind of the overall general highlights of the process. I don't know if we have our guys on. I don't think our professionals are quite on. Not yet. I told them about 7:30 we'll be ready. So do we have any other questions while we've got a couple minutes before they jump in and join us?
Carlin, do you have
Mhm.
time to answer a question about exemptions?
Sure.
So what happens when you have somebody, let's say, unrelated people that are both homeowners, but only one of the buyers is actually occupying the home and that person wants to apply for homestead? I know you can break down a percentage on the form. Would they put 50% ownership, or would they, can you put 100 if they're living in the home?
So no, because there's 2 of them on the loan, then the other person has a right to ownership of that home. And where it gets dicey is if that other person has an exemption in place on another property. Do they? Do you know?
They do.
Okay. So yeah, so you're gonna be maxed at 50%.
Okay, got it. Thank you.
Yeah,
I have a question.
sure.
If you want to protest, but you don't live in Texas, do you have to,
You can do
Come
it
in.
online.
oh, you can, you don't have to
Yep.
be in person?
They'll do appraisal review boards via phone or Zoom, I believe. The Zoom came into play with COVID. That's kind of like a benefit of COVID, I guess, is that we can now start doing them. So when you elect, when you file your notice of protest, you'll say, how do you want to do your board hearing? And you can say in person, over Zoom, or phone call.
Okay, so that's on the application for the
Yes.
protest?
Yeah.
Okay,
Yep. Good question.
thank you.
All right. Any other questions? We've got 5 more minutes unless they join us here shortly. They should be jumping in.
So is it pretty simple to do it yourself as opposed to hiring someone?
It's very simple to do. The question is, how can I disprove their case, right? In my particular situation, I built a custom home in a tract home community, which I don't advise anybody ever doing. And so they were trying to value my property as if it was out on acreage and was very, very high in luxury property. And my case was, yes, it's a nice custom home, but it's not worth what it would command in a custom home community because I'm in a tract home community. Therefore, I'm capped at what I could truly sell this home for. And that was very accurate. Like, there was no way I could go, like, had this home, I was in Buda, had this home been in Ruby Ranch, it would have been worth a lot more money. Yes, the land would have been worth more as well, but the structure itself would have been worth more, because that's a community of like homes. I was a fancy home in a tract home community. And so it wasn't worth the home. I'm talking, like, the valuation has a land value and then a home value. And so it's the property, the structure value that I'm talking about. They valued it too high. And so it was very hard to prove to them this, except I had an appraisal done. When I built the home, we did an appraisal, and the appraisal was really, like, it was the opposite of what the county assessed it at. I thought it was a little too low. They didn't give me enough credit for it being a custom home in a tract home community. But I even had that appraisal and said, look, even the appraiser is showing that the home isn't worth what we think it's worth because it's in this tract home community. It's not surrounded by other homes like it. It's a fish out of water. And the board just would not hear of it or look at it or see it. And it was very frustrating to me, but that's okay. I mean, they're just normal people. You present your case and do the best you can. When you decide to protest, the best advice I can give you, if you want to do it yourself, is just get with your realtor and have them help you. If the realtor belongs to my brokerage, I'll help them create the case. In the past, they've really wanted us to use other comps that they've determined are comps instead of us showing MLS comps. They don't want us to use MLS comps unless we have to. They'd much rather say, look, there's 5 others of my same home in this neighborhood. You tax them all 50,000 less than mine. Therefore, mine can't be worth 50,000 more. Make it like those. And then that's pretty easy adjustment and you win. What I think is going to happen this year, though, is because they don't have access to our MLS. They don't know truly how much the values have come down. To give you an example, there's a floor plan in Shadow Creek that a year ago sold for $395,000, and now there's one pending and it will close at $320,000. So it's a $75,000 price reduction from what it was worth a year ago. So if the county valued it anywhere near that $395,000 price, the question is, when the tax assessments come out, the valuations come out April 1st, is it going to be down in the low 3s? I don't think they're going to come down that low. I think maybe they'll come down 10%. So then we're going to have to use comps and MLS to show them they're wrong, and we're going to be fighting them. Now, how much of a fight are they going to put up? I don't know. That's a big unknown. Where I feel professionals can really come into play is when we're talking bigger numbers. Higher priced homes, I think it's very much worth it. And I've hired professionals to fight my commercial property because those numbers are very different and that world's very different. So I definitely believe in hiring professionals to help in those cases. I think we've got one joining us right now, and we may be waiting for one more here. Are there any other questions while we're waiting? I'm going to flip back to our slides. And we're going to,
Carlin,
yes.
how far back do we go if we are helping clients pull comps? How far back should we go?
We have 1 year to analyze. but the question is really, you know, a year ago isn't relevant data to the market we're in, or what was the market on January 1st, right? What was the homeowners on January 1st? It's a question we're answering. And so we're going to want to stay probably looking at fourth quarter for comps if we need to pull comps from MLS.
Okay, and for the areas that don't have a lot of comps, we might have to go back a year.
You might, but then you're risking bad data. You may want to expand outside that area a little bit and go a little further out to find, you know, again, it's kind of like appraisals on the resale market, you know, try to keep it to the similar year built, similar size of home and all of that.
Okay, thank you.
Yep, absolutely. All right, I saw Blair jump on. Are you there, Blair? Let me see. She may not be able to hear me. Hopefully, you should be able to unmute. And I think it's Pre. Are you guys there? Hopefully they're there. I know they're there. I can see them, but there we go. Hi there.
Hey, how are you?
Good. Thanks so much for joining us.
Yeah, thanks for having us.
Absolutely. So we've just spent the last hour or so kind of going over basic, you know, what are property taxes? How do they do the calculations? What are exemptions? Kind of what the timeline over the year looks like. We talked about escrow accounts and how they work with that. And we talked about new construction and how people can get in trouble with their property taxes being short on new construction. And so we've just ended kind of the basics about protesting, and I told them, like, let's leave the hot questions to the professionals. So here we are.
Can you hear me?
Yes.
Okay, sorry. Sorry, I'm
Yeah.
having some issues with my microphone over here. But that sounds great. So I'll just kind of start off and go through our slides, and then we could kind of open it up to a Q&A. Does that sound good?
Perfect. Yeah. I can jump to the next slide. Let me know when you're ready.
Yeah, sure. So I am, well, if you want to, you can just kind of quickly flip through them. I'm kind of just going to talk generally about us, and then I'll open it up to Q&A. But I am Blair Printy, and my coworker Cree is also on the line. We're with Texas Tax Protest, which is a property tax consulting firm. We were founded in 2010, so this will be our 13th season. We're based out of Dallas, but we kind of have offices all throughout Texas. And we just help clients save money on their property taxes. So if you've ever kind of gone through the process yourself and gone through all of the hearings, we would be the people advocating for you at your informal hearing, your formal hearing, arbitration, litigation, so on and so forth. So we kind of handle all aspects of the property tax cycle for our clients. And we typically represent about 60,000 accounts all across Texas. We'll represent pretty much all counties in Texas, but most definitely the major market areas such as Travis, Harris, Tarrant, Dallas. And then in terms of property types, we do everything from the typical single family residential property all the way up to the big commercial buildings that you'll see downtown, all the way to, you know, industrial facilities, and even the equipment that goes inside of those buildings, which is called business personal property. So we kind of do a wide range of property tax services. So that's a little bit about us. If you want to get into contact with me, you can always go to our website, which gives some more information about Texas Tax Protest and about signing up. And then I think Carolyn has my information. If any of y'all wanted to reach out to me personally to ask any property tax questions or any other questions that you may have. So I know I kind of wanted to keep that part short since y'all have been in a long presentation. Kind of wanted to just make sure that I got all of y'all's questions answered, so we can go ahead and open up the floor now and see if any of y'all have any questions.
Wonderful. I'll start it off. I'll kick it off with a question. So I'm getting asked this, and I'd love your interpretation on this answer. What do you think we're going to see as far as valuations go when they come out in April? Are you expecting the counties to come down given recent market shifts, or what are you thinking?
So I've always, tried to not expect something from a county because, you think that they're going to do one thing because of the market and they end up doing the opposite. But Travis County, unlike in any prior year that I've ever seen, their chief appraiser came out and said that they don't expect to see high value increases, and they even expect to see decreases in some areas and some areas stay the same. So I've never heard any chief appraiser come out and say that. So I think that's hopeful for at least Travis County for this year.
Yeah, I think one thing that our area really has experienced over the last 6-8 months that the rest of Texas hasn't seen is that because of our property values going up so fast in such a short amount of time, we took a really hard hit when the rates went up. The buyer said, oh no, we're not playing this game anymore. And so now our values have really come down quite a bit. I just gave an example before you jumped on where this particular floor plan last summer was selling at $395 in this neighborhood and now is closing at $320, $325. That's a huge drop in value, 20% hit in the course of less than a year. And so I think that in that we just didn't see that kind of valuation hit in the rest of Texas because they didn't experience this kind of almost bubble that we went through for the last 2 years. So it'll be interesting to see. I'm really hopeful that we see some values come down, or there's going to be a lot of fighting going on. I'm afraid you'll be really busy with our area for sure.
Yeah, absolutely. We're kind of hoping for it to go down as well. Clients, they had a huge increase, especially in Travis County last year, and even the year before, that was bigger than we had ever seen in the history of protests. Property owners really took a big property tax hit last year. So we're optimistic that this year won't be as bad. But remember, every neighborhood gets valued individually. So some neighborhoods could go up, some could go down, some could stay the same. So it really depends on each individual circumstance.
Absolutely. All right, let's open it up to other questions. If you want to unmute, feel free to unmute and ask, or you could throw it in the chat and we can read the chat. So however you guys want to do it. Don't be afraid. I know there's burning questions out there.
I have a question for Blair or Carolyn, or for Blair. On a VA exemption for disabled, are they only able to have one exemption for one property, correct? They can't use it for, let's say they own 2 properties, they can only use it for one?
Correct.
Okay.
Your VA exemption.
Disabled vet.
Right, for the disabled vet.
Yeah, it would only be on one of the properties.
Yeah.
Okay, thank you.
So Roberta's asking, my son has a co-signer. Does that mean for homestead it's only 50%?
No,
well, if the other party doesn't have an address that matches that property on their driver's license, then they wouldn't be able to apply if they are on the deed. So if they're on the deed, then yes, they can only qualify for 50%.
And especially if that other co-signer has a homestead on another property, then they're going to be next.
Correct, yes.
Yeah.
Thank you.
You're welcome. Other questions?
I'll ask. So what are the things that you see most common when people are fighting valuation based off of like material facts? Because we haven't really talked much about that yet.
sure. Like, what do we find that's most successful?
Yeah, or just maybe some examples, because we haven't really touched on that yet.
Sure. So there's a pretty big difference between when a homeowner or an agent goes in and protests. And the reason for that is because a homeowner will typically talk specifically about their property. They might talk, a price per square foot, whereas the district isn't looking for that information because they don't value based on price per square foot, or maybe some of the information that a homeowner gave them is irrelevant to the property tax valuation. So it kind of just depends on the specific argument. But in terms of having an agent, it's important. I think sometimes we're able to more effectively communicate with the appraisal district in terms of what would actually be most effective in lowering your taxes.
So one of the questions I think Amber was kind of talking about is like, when a home, we saw with Stumaget, a lot of homes were damaged. And so I was trying to explain to them that if the county is assessing your home at full market value, but your home is damaged or in disrepair, or maybe all the homes around you have been remodeled and updated, but your home hasn't been touched in 30 years, that can be a good argument for valuation corrections, correct?
Yeah, it definitely can be. So it's just how you communicate that to the appraisal district. So you're talking about the condition of the home. So typically, instead of saying, this is what's wrong with it, when you phrase it that way, they're going to want to ask for replacement costs and all that kind of stuff. But if you can phrase it, they currently have me in a good plus condition. I show them photos that my remodel didn't happen for 5 years prior, then I'm actually not in good plus condition. They can move me down to good. So it just kind of takes learning more about the property card and what classifications that they have your specific property in, to know how to take the pieces of information about your property and use them to the best, the best way.
Yeah, absolutely. Yeah, showing, in my experience, documenting, showing pictures. I gave the example of my client's foundation had failed. So she sent engineers reports and all kinds of proof that showed that truly this home had major structural issues. And so they took value off. We've got some online questions here. Let's see. Chris Duvall. Yes. So the county, if you have a homestead exemption in place, they can raise the value. So we saw valuations go up, but the assessed amount can only increase by 10% a year. It's capped with the homestead exemption in place. Where can we find, Amory has a question, where can we find a description of the condition rating codes we see on CAD? So on their website.
So on their website, it'll show just the different aspects of your property, but it won't have the condition and the percent good. What you'll have to do is if you protest your property, you can request your evidence 14 days in advance of the hearing. You'll have to do that at the time that you file the protest. If you file your protest online in Travis County, it's actually just a box that you can check that says, hey, I want a copy of my evidence. And with that evidence, you'll see a sales grid, an equity grid, a neighborhood analysis, and your property card. Normally, the property card will be at the very bottom of the page, and it'll list everything about your property. So it'll say, you have the first floor, second floor, if you have porches, a pool, every aspect about the improvement of your property. It'll then say the price per square, or like the cost valuation of that particular improvement. It'll say your condition. It'll say if you have any type of physical, functional, or economic obsolescence, to get your overall depreciation. And then they'll come up with the cost value of your improvements on your property card. They'll then multiply that by the mass market adjustment, which you can also see is on your property card. And then they'll add that value to the land to get your overall market value. So that was kind of a long-winded answer, but all of that will be located on the property card with the evidence, but you do have to request that from the county.
So Anne Marie is saying, what if we asked for the property card, but the CAD doesn't send it?
You can do an open records request, so you can go on their website and then they have, I think it's under the tab like public information. And you can submit an open records and just request the evidence for your property. And if let's say that they then send it and it's once again not included with your evidence, say I specifically want the appraisal card or the property card, that's what I want to look at, or I want to see the sales grid, or I want to see the equity grid. You can always file a information request if you need any of that information.
I'm sorry,
this-
can you repeat what tab that was under?
I believe on Travis County's website, on their main website, it's under public information, and then it's typically oh, here we go. It's resources and then public information. And then there's a button that says submit a request, and you can submit a request that way. And there's an online portion that you can submit your request to. Another question was is this just in April? Yes, you can request it in April when values come out and when you're protesting your value. You can do that when you're submitting the protest. You can just check that box online that says, hey, I want a copy of my evidence. Or you can submit an open records request any time of year. You could even say, I want the 2022 property record card. I want the 2021 property record card. I want the 2021 sales grid or equity grid. You can do anything through an open records request.
And some of the smaller counties are a little harder to navigate, you know, their websites. So what you can do is you can just Google your county and then open records, and it should direct you to the right page on their websites.
Are you guys just talking about the evidence for the appraisal? Because I know for Travis County, at least when you file, that's all online. Sorry, I had to step away for a second, but is that what you said? It should be on your
So
property
yeah, whenever Travis makes it pretty easy when you file a protest, you can do it online through their portal. When you file the protest, there's a box you can check that says, hey, I want a copy of my evidence 14 days in advance of my hearing. And when you check that means they're obligated to provide it at least 14 days advanced of your hearing, but most of the time they'll just automatically go and upload all of the evidence, and you can view it within your portal. You can just download it. It's normally, the property card's normally towards the end, or at least last year was at the end, and prior years it was at the beginning, so it could be anywhere.
Yeah, that's always been my experience. And also they uploaded the same data onto the property search portal on TCAD when you just search for the property, and it was there as well. So
the thing I want to let you all know is if you ever have an issue with getting something that the county is supposed to be giving to you, they're governed by the state. They have rules they have to follow. They're rights that we have. And so if you're having issues getting something that you need that they're supposed to deliver, you can escalate it, you know, once you've requested it. If they're not fulfilling that request, I'd get on the phone with them. You've got rights as a property owner to make sure they're doing their job. It's really important to know.
Right, that's a great point. And especially if you're the owner of the property, it gets a little bit tricky if you're requesting it for another property that you don't actually own. They may not give you market data because it's a non-disclosure state and they don't want to give you some of their market sales. But if you do own the property, then they pretty much have to give you whatever information that you're providing, provided that they actually possess that information. Sometimes they may not have a sales grid for a brand new construction property, or a property that was just purchased because they want your sales price.
Right. Yeah. They're going to send that lovely letter that says, hey, tell us what you paid for that.
Yeah.
Yeah.
So I see a comment in the chat. I protest every year with Bastrop, and I've only received it once. Yeah, that's typical with smaller counties. It's unfortunate, but now you know that you can receive it. And if you do request it with your protest, then it has to be provided with you 14 days in advance of your hearing. If you have requested that and put that language in there that you want all evidence 14 days prior to the hearing, and you get to the hearing and they're presenting evidence that they didn't provide you with, you can stop the hearing and say, hey, wait a minute, I didn't get this information. They can't, and then, you know, they won't be able to present that information, which does give you a leg up.
Talitha's asking, she missed, what exactly is the property card that we're talking about?
So the property card is gonna just kind of tell you everything about your property. What appraisal districts do is they do mass appraisal. So the first part of mass appraisal is valuing everyone based on cost. And to do that, it's going to be listed on your property card. So you'll see like a section just for your improvement. You'll see like your first floor, your second floor, porches, pools. It'll show you the cost valuation of that. It'll also show you what type of condition that they currently have you in. Let's say that they picked up on a remodel that had happened. They may change you from average condition to good condition, which if you see that you're in good or good plus, average plus, anything above average, that's something that you're definitely going to want to look into, especially if you have photos that show that your property is an average and shouldn't be in those other type of conditions. Or maybe you're an average and you need to be in fair, poor, or salvage. You know, it's really important to be able to see what they have you specifically classified as, so that you know how to advocate for yourself in terms of what type of photos to show. So the property card basically will just show, you know, the improvement, the cost valuation of it, and the land, and give you some information on it. Let's say that you have a land adjustment on your property. Let's say that they valued the land, but then they multiplied the land by 150% for a view. Well, that's, or 1.5% for a view adjustment, but your property actually doesn't have a view. That's something that you're going to want to look into as well. But you're going to see all of those type of, or you'll also see like appraiser comments on there. So all of that stuff is things that you'll want to see, so that you know how to kind of pick apart some of the district's evidence. Has anyone ever successfully protested a lake view if there is little to no water in the lake? Yes, you can. It does make it hard. So let's say that, so here's a few different examples where I've succeeded in that and some that I haven't. So let's say that you and all of your neighbors have lake views and all of them have little to no water. Well, because they're valuing you equitably with the other properties in that same position, they're less likely to remove it. But let's say that you and your next door neighbor both have the same 1.5 adjustment on the land for a lake view, but for some reason, the view that you see, there's little to no water, and the next door neighbor, there's plenty of water. I don't know exactly how that would happen, but let's just say it does. Then I think you would have a great case to advocate to say that you shouldn't be at the same land value as the property next door, or have that same type of. So the way that you would effectively communicate is by talking about the land adjustment, and you would know that land adjustment by looking at the property card.
That's great. Good information. Do you find that some counties are not necessarily easier to work with, but you just like, when you get a protest request, you're like, oh, I'm so glad it's with this county, because these other counties have terrible reputations and don't play nice and don't do adjustments, you know, or is everybody kind of the same? And
everyone is so different. We kind of joke about this at the office all the time. I mean, things that Travis County is so specific on that we have to do it this way. Other counties are like, what? We would never do it that way. You know, it's just, so it's kind of funny. Everyone's different. I think there's probably good and bad for every county that we work with. Smaller counties are a lot easier to work with. They really do want to help the property owners in that county for the most part. Some small counties don't, but so I mean, it just depends.
Yeah, no, that makes total sense. Do you mind sharing with us, like, how do you charge your fees? How does that work?
Sure. So we have a few different type of agreements. We can do either like a contingency fee. Oh, sorry. Cree was messaging me. So we do a contingency fee for the most part, which will just basically, you know, the amount of taxes that we save you, it'll be a percentage of that.
Great. And maybe taking you up on it for my commercial property. I have to fight that one every couple of years. It's a nightmare.
Yeah, especially commercial properties.
Yeah. Absolutely. All right. What other questions do you guys have? Anybody else? I'm about to have a really loud train go by in a moment. I may be muting myself. If we don't have any more questions, then we may let you guys all go. I'll be sharing this recording with the office. So if you know an agent that invited you to this, we can get you the recording and a copy of the PowerPoint. I'm going to mute.
Blair, I have a question.
Yes.
So I'm an agent, so I do feel pretty confident when I have protested for myself, and I've even helped my clients. But like for the average person, how would they know that they need your services?
I think we get a lot of people who just don't want to, it's a pretty complicated process. So we either get the clients that don't want to know anything about the process and just want us to handle it all, you know, ourselves. And then I don't know, I guess it just depends.
Yeah, I think it really depends on when you get your notice letter, because then you'll really see whether or not you need to protest, because sometimes the county gets it wrong in the right way, meaning, you know, they might undervalue you. So you don't want to stir any pots there, right? But you've kind of just got to look at that number and say, okay, is this in the right realm? Is this, you know, maybe $10,000 off what I think I could sell it for? Then maybe, you know, is it worth the effort? But if you get, you know, that really big sticker shock of, okay, that's, you know, 50, 75,000 higher than what I could even dream of selling my house for, then you really want to look into your options on whether or not you have the time and energy to protest on yourself, or whether you can hire someone.
I have a question. Can you hear me?
Yeah, go ahead.
Okay. If someone files a homestead and it's not showing in the tax records for whatever reason, and they're going back to prove that they filed it, they're taking their copy that they submitted it. Does the county have to honor whenever they originally filed it? So would they have to
That's
make
a
a
great
correction?
question. So it depends. So just filing the protest alone is not enough. You have to make sure that it's actually approved. And the county can say, well, we sent you a denial letter, or we sent you, you know, something that you needed to fix on your application, or we needed more information and you never got back to us. So we didn't approve it and we just moved on with our lives. And unfortunately that happens a lot. You know, mail gets lost, mail gets overlooked. If it's been within the year of you applying, you can always file retroactively. So you can go back up to 2 years. So that's one option. If it's been longer than that, though, of course, you will have lost a couple of years. So you'll just want to make sure that you have everything that they're asking for, and go back and see why it wasn't approved or why it's not on the account.
And the application is very specific. Like, you can't just ignore things. So one of the requests usually is showing your car registration to the address that you're claiming as your homestead. If you can't provide that, then there's other options, but you don't get to just ignore it and not provide proof of that.
Right, exactly. A big thing with our clients that we've helped with this specific issue in the past was their license that they used as proof had the wrong address on it, or the license was expired, or it was a temporary license and they never actually provided the final license. So those are just a couple of things that could have gone wrong that you've just got to take a look at.
So how far back can you go and fight for your property taxes? Is it just?
So you can only protest current year. So if, for example, you were like, oh, last year I didn't know that they increased me $50,000, there's nothing you can do about that. With the exemption, you can apply retroactively for your homestead. That's the only thing you can do. And you can go back 2 years.
That's why I was stressing it's so important that we pay attention to the valuation notices that are going to come out over the next month or so. You know, around April 1st to April 15th, you get 30 days to file your notice of protest. So that's like critical date, priority number 1. Anne-Marie says she recently heard someone going one day before their 65th birthday to file their 65 over exemption, and the county made them go back the next day.
Yeah, unfortunately, and that's one of those things where it's dependent on the county. So you will want to call before you make your way up there and just ask if they have those types of rules. Because some of the bigger counties will say, oh, you turned 65 in July, we'll go ahead and give it to you in January. It's fine. Some of the smaller ones, like she said, they'll make you come back on your birthday.
Gotta love them. All right, guys, any other questions?
I have one more.
Go for it.
I know the answer, but it's always good to have it on record. So, myth or fact, do property tax values affect market value?
The myth. I'll answer
That is a myth, yes.
It's definitely a myth. Yeah. Yeah. One should not, they may have some correlation, but because we are a non-disclosure state, the county has to do their own assessment value. And if that is not, buyers going to pay for a home, going to pay for market value, go to sell the home.
Yeah, I think that's one of the biggest things that I get that people don't know. I mean, I know I didn't know it before coming a realtor, and I think that's one of the biggest things that I get. Well, I don't want to protest them and then my value of my house go down if I want to sell it. I'm like, no.
Yeah, that's a common question we get as well.
1,000%. All right, guys. Well, Cree and Blair, thank you so much for joining us. I love both your names. My gosh, those are great names.
Yeah, thanks for having us.
And I'll make sure everyone gets your information. And like I said, everybody, we're going to have a recording of this and the PowerPoint. So I'll make sure it's shared. And then I'll also share links in our hub for those of you that work with me to the resources I mentioned. So the exemption booklet and understanding the state taxes. So, all right, guys, have a good night. I'll let you all go.
Bye, everyone.
Have a good night, you guys.
Bye-bye.